Hi and welcome to Demon Trades, Trading Basics Video 6, Account Management. This is the most important part of every trader's setup, okay? Because you're going to need to know how many shares you can buy in which stock you want to buy. So you need to know how much balance you have, how many shares you can buy, and you need to be able to manage your risk so that even if you have a succession of bad trades, a bad day or a bad week, you're not going to end up out of pocket, penniless, with nothing left in your account. Okay, so really pay attention to this one, guys. Okay, so how much of my account should I risk in a trade? So something I often hear is, can I put my whole account into one trade? Well, yes, of course you can. Especially if you're a day trader, you know, you might not find many trades in a day worth trading. So you want to be able to get the maximum return when you do find the right setup. Not everyone trades like this. Some very advanced traders, and even I, actually trade multiple stocks at the same time. So for me, 10 or 20% of my account in one trade is fine, because then if I see other setups on other stocks at the same time, I've still got money to invest in them. But it's entirely down to the individual. You could, if you wanted to, put all of your account into one trade. And maybe for beginner traders, that's probably a lot better. So then you're focused only on that rather than chasing 2, 3, or 4 trades at the same time if you're doing day trading. Swing trading, I would definitely say 5 to 10 trades, or just 10% in any one trade, just to manage the risk, especially with that gapping up and gapping down. Like I said, yes, you can have a stop loss, but it might actually come in less from overnight trades. So that's definitely an important thing to factor in if you're swing trading or position trading. But like I said, it's all about how you set each trade up. So you can limit your losses for day trading especially, which will allow you to trade your whole account in one go without risking too much or being too exposed with the stop loss. It's important when you're managing your account that not every trade will be successful, okay? That can be in swing trading and in day trading, and even sometimes in position trading. So it's all about exposure. How exposed are you going to be? How exposed do you want to be? How sensible is it to be completely exposed to one stock without a stop loss? It's not smart at all, okay? Always, always, always put in your stop loss, no matter what you're doing. Swing trading, position trading, day trading, okay? Now, like I said, you're not going to win in every trade, so you have to make sure that the ratios are in your favor. So you might be 40% successful, 50% successful. You might be really good. You might be 60, 70, 80% successful. But if the win ratio to loss ratio in terms of how much profit you expect to make as a percentage or as a fixed price, whether it be $1, $2, $3, $4, $5, $1, $2, $3, $4, £5, 50 cents, 50 pence, or even in euros, you have to make sure really that if you're at 40 or 30%, it's still enough to get by. Okay, and by get by, I mean not lose your account. So I always work on the principle, a basic principle of 3 to 1. Mine's a little bit more advanced than that, but if you worked on a principle of 3 to 1, then you only need to be right 25% of the time to break even, obviously minus your commission, so you'd probably end up a little bit down, but commissions, depending on who you use, are relatively low anyway, so you'd more or less be there. 30% you'd be okay, 33% you'd still be making something, okay? So even if you only win 1 in 3, you're still making money if you work on this 3 to 1 ratio. Now some people work on a 4 to 1 ratio, some people work on a 2 to 1 ratio. It's more achievable because if it's 2 to 1, the stock doesn't need to move as high as it will with a 3 to 1 ratio. But generally, when you're in these things, when you're right, very right. And when you're wrong to a very small amount because you've got a very solid stop loss. Okay, but let's work on the principle of you found a nice stock at £40 or $40. So for your 3 to 1 ratio, you're going to say, okay, so if it goes to $36, I sell all my shares, I get out of the stock, and you've made a $4 loss per share. Okay, that could still be a lot if you've got 100 or 1,000 shares. That's still, you know, a lot of money, 400, 4,000 pounds or dollars, however you want to look at it. But what you do is you say to yourself that your profit margin will be $12 so on the $40 originally, so $52, okay? So if you're right, you're going to make 3 times as much. That's the maths of it anyway, okay, in case you didn't really understand. So the golden rule, what is the golden rule? How do we make sure that we don't end up bankrupt? How do we make sure that we've got enough money in our account to make a good profit every time we are right? Well, the rule is never risk more than 2% of your account. And but never, never, ever fall short of this rule, especially as a beginner. 2% is the maximum you can afford to risk. Okay, and it doesn't matter if you have to be wrong on each setup 50 times to be worried about it, okay? Because it's 2% of whatever you've got. So as it comes down, that 2% is actually less and less and less, okay? And that's the idea of it. So as you're coming down with 2%, it's almost impossible to get to the bottom of your account, okay? But obviously when you're doing 2% in the upwards trend, it's getting bigger and bigger, so 2% is worth more than before and before and before, okay? It's just a process of managing your account so that you never end up at zero, okay? And when you get good, you just build and build and build, okay? So it's really important. It's a law of averages, if you like. 2% of 100 is 98. 2% of 98, you get what I'm saying? Okay, so that's the principle. Very easy, very simple, very good. Do the maths, make sure you're never risking more than 2%, and you'll be able to trade for a long time. And if you're good at it, you'll make a lot of money, okay? Also, I need to remind you, leveraged accounts, if that's something you're absolutely set on, I advise that you shouldn't be, definitely not at the start of your career. But if you are doing leveraged accounts, 10 times the risk, so you need to be really careful. And to be fair, you need to set a very strict stop loss. I'm not sure how possible it would be to be profitable if you've got a 10 or 25 times leveraged account, because obviously the losses are all yours. So the profits are all yours, but the losses are all yours. It might be that it's 100 times on $10 for the profit, but it's also for the loss. So you might only have £1,000 in your account, but you've leveraged 10,000. If you've done a 2% loss, that's £200 or $200. That account has gone from 10,000 with the leverage to 8,000, okay? So you've actually made a 20% loss. That's why it's really, really important that you consider whether or not leveraged accounts is something you really want to pursue. Okay, just a roundup of this page is never, ever, ever, ever forget the 2 bullet points above, okay? Risk and win ratio. It's going to be the difference between you being profitable and not profitable, okay? Okay, right, so next page. What is a leveraged account? We've already spoken about this a few times, but I feel the urge to remind you, even if you're going for a leveraged account, don't do it until you've traded in a simulator or paper traded for at least 3 months. Seriously, guys and girls, 3 months of education training before you go leverage. You can still trade with your small account. You can still make money on a smaller basis. You know, you're sort of going from Sunday League to the Premiership in terms of quality and risk and profession. You know, you need to be very good to be working with a leveraged account. You need to be switched on. You need to know what you're looking for. So just don't do it until you know that you're profitable on a weekly and monthly basis, okay? I wouldn't want to see anyone lose all of their investment just because, you know, they've gone straight into top gear, they've missed all the steps, all the learning processes, they haven't got the right information, and they've just blown all of their account up in weeks or a month because they were overconfident. Nothing wrong with confidence. It's all the best. I'm all for people who are confident and have got the courage to make the right decisions. But there's a line between confidence and what's the right political word to say? And overconfidence. We'll just leave that overconfidence, okay? Don't go straight out and get a leveraged account. Get switched on. Work out a trading strategy that you're confident in. Prove it and make sure that you can make consistent money from it. And then when it's consistent, yeah, sure, go for it. Get a leveraged account, 10 times the profit, 5 times the profit. Why not? I can't argue with that, but make sure that you've done all of your homework before you go that far. Okay, so win-loss ratios for day trading. So unfortunately, even the best day traders in the world will get it wrong. Okay, in my introduction video to Demon Trades, I spoke about it. Professionals have put businesses under. Okay, don't think that you're the exception to the rule. You will make bad trades, and it won't be through not doing the right things. Sometimes it might be, especially in the early days, but you might spot something that looks like the perfect setup. Everyone's been there. You know, everything was going in the right way for you to make the decision you made, but the stock market just decided to say no. No, some big hedge fund manager come in and sold a bunch of shares, bought a bunch of shares, messed up your setup. No one can plan for that. Okay, you can't plan for when someone with a large amount of money comes to invest or sell off a large amount of shares. You never see it coming. Okay, especially if it's in the middle of the day. You can predict it or see it in the morning and in the evening, but in the middle of the day, there's nothing you can do. There is also something that you need to be made aware of, is that banks have actually now got computers buying and selling shares throughout the day. Okay, multi-million pound funds, and they're buying and selling shares day in, day out, second in, second out. Okay, and they're just using clever software which looks for patterns in certain stocks, and they'll trade them all day long. Typically, they're going to be the big ones, which you don't have to worry about. So, you know, the big ones like Apple, Microsoft, Tesla, places like that, these bots, these machines, whatever you want to call them, are trading these stocks, making money for the banks. And they're successful to an extent, but they make losses too. But you want to stay away from those stocks, because they're very hard for a human with a limited brain capacity to find consistent patterns. Okay, leave that to the machines. Let them do their thing. They're playing with, you know, $200-300 stocks, $1,000 stocks. Okay, you don't need to worry about that, in my personal opinion. You want to be where all the retail investors are, and if you choose to follow us, I'll be letting you know on a daily basis where they're trading. Okay. But anyway, so even professional traders, hedge fund managers, they have bad days. Okay, so that's why the win-to-loss ratio is so important. This will enable you to be profitable long term. And like I said before, 2-to-1, 4-to-1, 3-to-1. Some have even higher. You can have your own one in your head. You might have 1-to-1.5, which will be better for your risk, especially at the start. You'll have a better chance of winning more often. But obviously, you've got to be able to find the right stocks. Okay, so that for me is wrapped up. Okay, so here we have an example from myself. So this is my day trading setup. As you can see here, in terms of my chart setup, I have got this line here, which was the previous day high. This line here, which was the pre-market high. And this line here, which I think was a few days before high, and it crossed on a few levels, so I put in these lines of support and resistance, okay, and this was going to dictate my day's trading. Basically, on my pre-market screener, this company Blink Charging came up with higher than average volume, so I decided to set it up and see how the day went out. I was on the 5-minute candles, and I'd seen early on there was quite high relative strength index. Okay, the RSI was quite high, so I kind of stayed away from it at this point. I saw the big rise in the morning. I know, well, at some point it's going to pull back. How much, I don't know. And I was just really watching it. I was looking at these levels to see what was going on, and early on, after about 50 minutes, it broke through this first line of resistance here. And it had broken through it before, and that's okay. So really from this point, I was looking for a pullback to this line of resistance and to find an opportunity to go high. Now, it did actually come back to this level of resistance here, but it was still quite high on the RSI, and it was too high really for me to be confident enough to make that decision. But I was aware that it was still above my 9 EMA, the black line here, my 20 EMA, the red line here, and even ahead of my VWMA here, which is my version of VWAP, if you like. Now, I knew that this was still going in one direction. There was every reason for it to be going in that direction. and the volume was just insane. So anyway, here was the largest volume. The largest volume will tell us a few things. It means generally a change in direction. So it had been dipping. Huge volume here, spiked right up to that, just below $23 line here. And that was going to be my top for today, okay? So wherever I got in, the target was going to be just under $23. And I was aiming to get back as close here as possible. But I kind of chickened out here, to be honest. I didn't buy it here. What I did then notice here is there was some trading off of this line here. Okay, you might want to call it, I'll call it the VWAP just for simplicity. So I was really now thinking if I can buy close to this line, it might be a good position to trade. It's dropped back down here, this line of resistance, but it's still closed above the resistance. So although it traveled past on this occasion, it held above at the end of that candle, okay? So anyway, here we have an indecision candle you can't quite see. This was my entry point. We came close again to the VWAP here, which is a good indicator for me for an opportunity for profit. And my target was going to be just below the $23 line, okay? We had lines of resistance still playing as lines of support at the just below $22 here. So I decided at this point that I would enter the trade, okay? Volume's okay, it's not crazy. RSI is almost in the middle. So it's not overbought, it's not oversold. It's an okay time for me to make a decision to get in here. So anyway, I bought 1,000 shares and I watched it trend, okay? Now, my stop loss was going to be back here at just below $21, okay? And I bought in at $21.35. So that was about 40 cents, 45 cents. So on a 3-to-1 ratio, if I'm prepared to lose 45 cents, I want to be making about $1.15, okay? So in my head, $22.50 was going to be the golden number, all right? Now, this is where my trading is slightly advanced, and I'll touch on it here for you, just so you have an idea. And this is to do with account management, okay? So just because you're in a winning trade, I'm still really guessing that because we're above these lines and because we've had this high here of just under $23, that my target is achievable. But I don't know for certain. No one knows for certain that it's going to carry on going up. I know that there's good investors here. I know that with the movement of this stock, the way it's going up and down, but in a trend upwards, that there's a good chance I'm going to hit my target, okay? So I've been at my trade, I've got 1,000 shares, and we have rebroken this line of support stroke resistance here of 21, okay? And I've also noticed at this point that we're kind of trading off of this 9 EMA line, right? It's staying above, it's bouncing near it, but it's staying above, okay? Now, the most important thing to remember here is you can never really know when a stock has reached its highest high, okay? All we can do is surmise that, okay, it's coming down now, we need to take some profit. We could always get back into the trade if we see another setup, but we don't want to lose all the money that we've just made. So when it breaks this line of resistance support here, I say to myself, well, I'm winning, right? Okay, I'm up at about 65 cents on a share. So why not take some of the profit now? Don't take all of it, because then you're going to absolutely be licking your wounds if it does go up to $30, $35 in that day and you've sold everything out. So what you do is you decide to sell a portion of your stake in that stock, if you like. It can be 25%, 50%, 75%. For the basis of this tutorial, let's say I sold 50%. We retested this line and got above it. So I sold half my stake there. So I've made $325, okay, profit. At this point, I readjust, okay. I say, right, well, my entry point is now my stop loss, okay. So I've moved my stop loss from just below $21, I think it's about $20.90, to my entry point, okay. That's now my stop loss. If it hits this, I'm selling out. So now I'm in a winning trade, but I've still got half of my stock. Where do I take this stock to? Well, as you can see, we're back trading on this 9 EMA line again, okay? And this is where I say to myself, we break this $23 point. I could just sell out here. I could say, okay, well, it might fall back down. But I noticed that we're now trading on this 9 EMA line. And this is where I change my strategy from resistant line to the 9 EMA trading line. Okay, we'll talk about this in more detail. But I decided to say to myself, when it crosses this line again, an important line indicating strength and resistance, when it crosses this line again, I'll close my trade. So I actually closed the second half of my shares at $23.45. Okay, and I started at $21.35. So that's an extra $2.10. So on my other 500 shares, I've made another $1,000. So I've made $1,300. Okay, now trading started at 2:30. So in the space of 2:30 UK time, so by 6 o'clock UK time, 3.5 hours, I've made $1,350. It's not bad for a day's work, okay? I don't know many people in other industries who are earning more than that, okay? Of course, there's going to be some, but it's small numbers. So that's the way to manage your risk, okay? As the price breaks through levels, move your stop loss up and take some profit, okay? Take some profit, put it in the bank. It's a feel-good factor at the end of the day, and it can make you feel much more confident for the other levels. If I hadn't have taken that there, chances are I would have held out for this and sold out here, okay? And on a bad day, it would have never hit it, and I would have sucked out, and I'd have made a massive loss. So really remember that. Sell some on the way up. Don't gamble. I know it's addictive, and people like to gamble, and you want to put all of your chips on black or red. But be sensible, you know. If you want to do this as a career, you've got to be smart about it. You've got to be sensible, because you remember the big wins and you remember the big losses. But it's all that stuff in between that you don't really remember that's really important, okay? If you have lots of really small losses, just tiny losses, but lots of them, they'll wipe out your account. And things like this can really help you avoid that. And they can also put you under less pressure to sell all of your shares, okay? Selling half or 25% is a good banker. Personally, I really like to sell half because it's a big chunk of money, big chunk of profit, and it's a feel-good factor, okay? Right, so win-loss ratios for swing and position trading. Same thing applies, guys, okay? Pretty much going over the same stuff, but it still applies for swing trading and position trading. You really don't want to be holding on to a falling stock. I've seen it a few times. I've seen a few people I follow who at one point I regarded really highly. You know, they'd show some great trades, and then they started chirping about certain stocks, and they're just falling through the floor. You know, there was a certain stock, I'm not going to name it, but basically it was at one point up at £1.20 UK, and that's a big deal over here. A stock at £1.20. They were ranting and raving about it. It dropped to about £1, ranting and raving about it. You know, buy some more. You know, average down, buy some more. Great. 90p comes, average down, buy some more. 75p comes, average down, buy some more. And it just kept falling, and it's now at 50p. And they don't talk about it at all, but they didn't follow that stop loss. And these are respected people, all right? People who at least present themselves as very good investors, very good traders. And you can lose all of that credibility so quickly. Now, don't get me wrong, people get things wrong. I've got things wrong. You know, it's just the way of the world. Stock market can be unpredictable. Don't commit yourself to something, you know, blindly, you know, blind faith. Look at the patterns, okay? That's all you're interested in, really, is the patterns. If it's sinking and it's continuing to sink, the longer you hold on to those shares, the more money you're going to lose, and the less money you're going to have to invest in something better. That's what's really important. Always save yourself for the next day's trading, because what if you've completely committed to this stock and it's falling for months? Maybe it does return, maybe it doesn't. That's the worst case. That's the worst case scenario, is it doesn't return. You know, and you've missed out on all these fantastic trades that have come up because you're so committed to this one stock. Take the money and run. Trust me. Set up your stop loss, take your money and run. And if you're steaming a bit because you've lost a bit of money, leave trading for a day. Go out, go for a walk, have a break. disconnect from the world, get your thoughts together and come back the next day fresh, okay? It's really important that you don't hold on to a falling stock. So here's my swing trading setup. This was probably my favorite trade, an early trade, something I spotted early. I didn't really actually have a lot of the skills that I have now at this time, but I just love the way it played out. This stock, Supply at Me, it's a UK stock, it's new, it's a penny stock, and I started getting into trading seriously around this time here, around May, June, July, okay? And this stock came onto the market, brand new to the market at 1p, and it just crashed, as you can, crashed, and just fell all the way down. And I think got down to about like a 0.03 of a penny a share. They have a crazy amount of shares, this company. And then all of a sudden, sort of end of July towards August, huge volume comes in. And I myself am saying, what is all this volume about? It's in the billions. Okay, it's a micro penny stock, you could say. It's a micro penny stock. It doesn't take a lot to get that volume, but there was huge volume around it. So I decided to do some research on that stock. And basically they're offering a new style of loans. Not to go into it too much, but it's a brand new system they're offering for companies to borrow money, offset against their existing material stock. All that I was interested in was the volume. So here we go. I've got the lines of resistance from previous highs used to sort of earmark where this stock could go off of such crazy volume. And we've got here a nice little triangle trend line, okay, which sort of tips off the tops of the highs and tips off the bottom of the lows. You're trying to really here connect as many candles as possible. To explain it briefly to you, I will go into more detail when we come to trading setups. And basically what we're looking for here is we're waiting for the candles to pop out of this channel, okay? And it pops out of this channel mid-early August, okay? And at this point it's broken out. You can't really see it here, but there is a tint of green there, and I'm promising you that is a candle, okay? So it's broken above this line, which means it's time for change, okay? All this volume now might mean something, okay? And as you see on this day here, the volume is actually higher than the previous day. Now, for me in this situation, I need it to confirm by another candle, another completed candle or nearly completed candle. Like, these are day candles, and therefore I'm going to wait until the last 15 minutes of the day to see if it's confirmed that breakout, because it might break out and then the next day it might go, oh no, oops, I made a mistake, I'm going back into that trend, okay? And that's why you need to confirm. You need the second candle to confirm that your theory is right, because it could just be a blip in the system, okay? It could be a momentary blip and then it's back to normal. And that's why it's important to wait. So on this day here, towards the end of the day, I go ahead and I buy 150,000 of these shares at 0.1 of a penny, okay? This was early times, my account was very small, and this pretty much made my account in itself. Now, it cost me very little, and it was a gamble, you could say. So at this point, I was waiting for these levels of resistance, okay? So within a few days, this thing has skyrocketed and it's not stopped. Okay, so at this point, I don't know enough to know about selling some of my risk off to get the good reward. But it had broken through on the previous day, this point here of 0.62 pence. So already in the space of about a week, I've increased my account by 6 times. Okay, at the close of the day, it did close down, I don't know, about 55, 57. But that was the potential in a few days, and I can't tell you how good a feeling it was. So having done my research, I realized what I needed to look for. And it peaked up here, and if I'd been smart, I was looking for this 1 penny mark, this original mark here. I was holding out for it, and I was so confident after this day here it was going to happen. But like I said to you, what goes up eventually has to come down, okay? This is all just off of hype. None of this is based on this company having big contract wins or, I don't know, a new product. The product's there. They're just trying to test it out, basically. So anyway, I realized that we've got a point here of 0.8 and 0.62, these are the two real deal changing levels, okay? So I wanted to hold out for this 0.8, and really luck more than anything. It held out. My thought was, if it closes below this 9 EMA line here, I'll sell. But if not, I'm going to hold out for this 0.8. And I was really still hopeful of this 1 penny point as well, okay? So anyway, on this day here, it did break above 0.8, and I had my profit margin taken for half the shares. So I sold 75,000 shares here, okay? Half my risk. I was like, well, okay, if it doesn't make the 1p, I know that I've got my 0.8 of a penny on the stock. Signed, sealed, delivered. I've got that cash there. You know, I was kind of hoping for a retest of that 1p, but it just never happened. So I sold half my stock there. Still, remember, this is 8 times my initial investment on 50%. Okay, so that's 4 times, if you like, on half of my investment. And then it did eventually break through this 9 EMA line, which is a good indication that it's probably going to go down. And it had skyrocketed up, so it's pretty inevitable that it is going to come down, okay? And I closed out just before the end of the day there at 0.6 of a penny. Now, if I halve those and add those together, right, that is 7 times my initial investment, okay? About 150 pounds. So in the space of what was more or less a month, I'd turn 150 pounds into 1,050 pounds, okay, minus some commission fees, which weren't massive. And that's the sort of potentials that is there, okay? With my swing trading setup, you can see I have the 9 EMA, the 20 EMA, and the 9 VWAP up there, okay? And as you can see, everything's indicating it's on the move. It's a momentum stock. It's on the up. Look at the volume. The volume is much higher than what it was at these levels here. And once it settled down, I got out. And it did dip. It did dip after that. So it was, for me, a very good move and a very sensible move. Okay? Anyway, that's my risk management video done. If you like the video, please hit the like button and please subscribe to our channel.